I do right now, though, want to bring in Bill Ackman on the phone. He took to Twitter today to urge the president to take more dramatic measures to stop the spread of the virus. Bill, I thank you for joining us today.
Well, maybe just a little bit of context. I'm an optimist, but beginning in, late January, I was getting increasingly bearish, and I woke up with a nightmare.
What you are hearing will probably go down as one of the most famous interviews in finance history. This is Bill Ackman, legendary trader and hedge fund manager, speaking to CNBC about the state of the market on March 18, 2020. A call that many see as controversial, an interview that will without any doubt set the tone for the year and ultimately netted Ackman and his firm over $1 billion in profits, betting against corporate bonds before panic had overtaken the nation. Remember, this was early March, and it was only 5 days earlier that the NBA had shut down due to the developing health situation in the US, and slowly, panic was settling across North America. Ackman was one of the first prominent members of Wall Street to really make some dark predictions that mostly came true. Today, we examine this infamous interview and look what was said in detail, observing what ended up being true. At the end of the day, we will draw some conclusions and make our very own bet based on the same logic. Before we begin, we have to understand something here. Ackman, while mostly logical and sincere, did have a serious bias coming into this call. His firm, which manages billions and billions of dollars, already had placed a bet against the market, and while he may never admit it, Bill without a doubt had a severe bias, $1 billion interest in getting the market to panic over the health situation. So while most of his predictions came true, it's important to note that not everything he stated was right. In this clip, you can hear some of these panic statements.
What's going to happen if we continue the way we are operating is until a vaccine is manufactured, distributed, and injected, we will go through a depression-era period in the country, and millions of people will die around the globe, and as many as 1 million Americans are going to die. Millions of Americans have the virus, and I'll give you some interesting, anecdotal data points. So we took very aggressive measures at Pershing Square, because I was obviously very bearish on this. On February 27th, I told the firm that we're going to work from home. We have a small firm. We've got 50 people. We already have 2 people. Again, we've been working from home for 3 weeks. We have 2 people out of 50 that are likely to have the coronavirus based on their symptoms. It's killing young people. It's killing healthy people, right? But now, take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties. It's down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company in the world. Park Hotels and Resorts. This stock's down from 33 to 4. This is a spin-off from Hilton. Why is it down from 33 to 4? Because every hotel is going to be shut down in the country. Every one.
Hang on just 1 second. You say Hilton is going to zero? I mean,
disaster where the airline industry goes bankrupt. Every industry, each month. Okay, name a sector. It's toast, and I can rank order them. Okay, and they're all going to go. Okay, he's not going to get reelected, and it's going to be a shit show, if you excuse the expression. Okay.
While most of these points remain untrue, overall, throughout the interview, Ackman was correct. While the health situation did not deteriorate to the point where there were millions dead, there was massive shutdowns and disruptions to the market that eventually resulted in the S&P 500 crashing heavily, earning him and his clients millions, possibly billions. You might be surprised to know that back in early March and late February, most people, even experts, were not predicting doom. The market was at all-time highs, and predicting this downfall was deferred as a risky action. Prior to this trade, Ackman was known to most as the guy who lost billions thinking Herbalife would fail, but he redeemed himself. Not only did he predict the downfall, he also predicted the current bounce, announcing he was buying up shares during the bottom. You can hear him say it here.
But I got bullish, okay? And the reason why I got bullish, and I've been aggressively buying stocks, including Hilton, today, okay? And I've been buying all the way down. Hilton, restaurant brands, Starbucks, walk your way through the only stocks I'm not buying are companies who are on the board and I'm restricted.
So what does this all mean, and how can we use his comments from this interview to try to shape what his next move is? In the upcoming months, we understand that certain conditions are set to create volatility. Predicting whether things will keep going up or fall down is not something he's going to share unless it's in his best interest to do so. But we can relate back to his comments about capitalism not working in the 18-month shutdown, the airline industry being done, and the future being uncertain as long as there's no vaccine, to base our next judgment on. With 2020 shaping up to be one of the weirdest, most bizarre years of our lifetime, upcoming events will likely mean that this trend is going to continue. We are facing a possible renewal of the CARES Act in late July, falling unemployment figures, rising cases of that thing I can't mention without being flagged on YouTube, racial divisions at all-time highs, and an upcoming election that is sure to impact stock prices. This is why I'm looking at some of the most vulnerable businesses to generate a strategy that we can profit from volatility exclusively. Like Ackman mentioned, airlines are likely the sector with the most amount of headwind in this space. Those bogged down by leverage and debt like American Airlines make for great positions. While some predict bankruptcy for this historic airline, others like to say that it's also a company that will get bailed out. For this reason, I'm entering into a strip strangle position with the hope that American Airlines will remain volatile in the coming months. We can take a look at the following chart to get a sense of the action and what needs to happen in order for us to come out profitable. Basically, what we're going to be doing is buying one August 21st call for $159, and at the same time, we'll be buying two $11 puts for $288, making our total entry price and max loss $447. This will generate a strategy that will return a profit if the underlying security makes a big price movement in either direction, but the profits will be higher if the movement is down rather than up. As you can see, about halfway through the expiration around July 25th, we will need the price of American Airlines to enter below $9.50 or above $18.50 in order to exit profitable. Considering its 52-week low is $8.25 and its 52-week high is $35 a share, there's a very good possibility, if conditions do not improve in the travel space, that American Airlines could face significant pressure hitting prices well below that point. At the same time, with so many short sellers and the possibility of a bailout incoming, there's also a chance that this stock could explode upwards. Either way, as long as there's volatility, we are set to profit. If you plan on following along with this play, or you want to engage with a community of option traders, please make sure you join my Discord server, where I'll be giving out updates regarding the results of this specific position. It's also a great place to chat and interact with people making all kinds of option bets and get inspiration for a new trade. You can find the link in the description below. As always, thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed.